The global economy is projected to grow at a modest 3% in 2025. This rate is significantly lower than previous years. Multiple factors contribute to this projected slowdown. These factors signal a changing global economic landscape. This slowdown raises concerns about the future. Businesses and policymakers are closely monitoring the situation. Understanding the factors driving this trend is crucial. This analysis will help us navigate the challenges ahead. One major factor impacting economic growth is rising trade tensions. These tensions create uncertainty in the global market. Businesses hesitate to invest and expand due to unpredictable trade policies. This hesitation can lead to decreased economic activity. Policy uncertainties further exacerbate the situation. Governments are grappling with economic challenges. This leads to frequent changes in regulations and policies. These changes make it difficult for businesses to plan for the long term. The world is also facing increased geopolitical instability. From rising tensions between major powers to localized conflicts, the geopolitical landscape is becoming increasingly complex and unpredictable. Nations are grappling with issues that range from territorial disputes to ideological clashes, making the global environment more volatile than ever before. Conflicts and tensions in different regions create uncertainty. These conflicts often lead to humanitarian crises, displacement of populations, and a general sense of instability. The ripple effects of these tensions are felt far and wide, affecting not just the immediate areas but also neighboring regions and even global markets. This instability disrupts supply chains and increases market volatility. When regions are embroiled in conflict, the movement of goods and services is severely hampered. This leads to delays, increased costs, and a shortage of essential commodities. The stock markets react to these disruptions with increased volatility, making it difficult for investors to predict future trends. Businesses become wary of investing in unstable regions, further impacting growth. Investors seek stability and predictability, and when these are absent, they pull back. This lack of investment stifles economic growth, leading to higher unemployment rates and a decrease in the standard of living in affected areas. The interconnectedness of the global economy amplifies these risks. In today's world, economies are more interconnected than ever before. A disruption in one part of the world can have cascading effects on global trade routes, affecting businesses and consumers worldwide. This interconnectedness means that no country is immune to the impacts of geopolitical instability. Events in one part of the world can quickly spill over to others. A crisis in one region can lead to economic downturns in others, creating a domino effect that can be difficult to contain. This interconnectedness makes it essential for countries to work together to manage and mitigate these risks. This interconnectedness makes it crucial for businesses to have contingency plans. Companies must be proactive in identifying potential risks and developing strategies to address them. This includes everything from diversifying supply chains to investing in technology that can help mitigate the impacts of disruptions. Adaptability and resilience will be key in navigating these turbulent waters. Businesses that can quickly adapt to changing conditions and remain resilient in the face of adversity will be better positioned to thrive. This means being flexible, innovative, and prepared for a range of scenarios, ensuring long-term success in an unpredictable world. Another factor contributing to the economic slowdown is inflation. The cost of goods and services continues to rise globally. This rise erodes consumer purchasing power, leading to reduced spending. Businesses also face rising input costs, squeezing their profit margins. Central banks worldwide are raising interest rates to combat inflation. While these measures aim to stabilize prices, they can also slow down economic growth. Higher interest rates make borrowing more expensive, discouraging investment and spending. Section 5. Sector-specific impacts, the automotive industry's struggle. The economic slowdown is affecting various sectors differently. The automotive industry is expected to experience a continued downturn in 2025. This slowdown is driven by several factors, including supply chain disruptions. The global chip shortage continues to impact car production. This shortage has led to production delays and increased vehicle prices. Consumer demand for new cars has also weakened due to economic uncertainty and inflation. Section 6. Interest rate reductions, a glimmer of hope. To mitigate the economic slowdown, some policymakers are considering interest rate reductions. Lower interest rates can stimulate economic activity by making borrowing more affordable. This can encourage businesses to invest and consumers to spend. Lower interest rates could potentially provide some relief to the automotive industry. Reduced borrowing costs may encourage consumers to purchase new vehicles. However, the effectiveness of interest rate reductions depends on various factors. Section 7. Potential economic consequences, a mixed bag. In this section, we delve into the multifaceted impacts of economic policies, particularly focusing on interest rate adjustments and their ripple effects across various sectors. Interest rate reductions are not without potential downsides. While they can stimulate borrowing and spending, they also come with significant risks that need careful consideration. Lowering interest rates too aggressively can fuel inflation. This means that while consumers might initially benefit from cheaper loans, the overall cost of living could rise, negating those benefits. This could lead to a vicious cycle of rising prices and further economic instability. As prices increase, consumer confidence may wane, leading to reduced spending and a potential economic downturn. Central banks face a delicate balancing act. They must weigh the benefits of stimulating the economy against the risks of triggering runaway inflation. This requires a nuanced approach and constant monitoring of economic indicators. The impact of interest rate reductions on the automotive industry is also uncertain. While lower rates can make car loans more affordable, boosting sales, the industry still faces other significant challenges. While lower rates may boost sales in the short term, they may not address the underlying issues. Factors such as supply chain disruptions, changing consumer preferences, and technological advancements play crucial roles in the industry's health. Supply chain disruptions and the global chip shortage will continue to pose challenges. These issues can lead to production delays and increased costs, which may offset the benefits of lower interest rates. The economic landscape is indeed a mixed bag, requiring a comprehensive and adaptive approach to policymaking. Section 8. The path forward, uncertainty remains. The global economy is facing a complex and uncertain future. While interest rate reductions offer a potential tool to stimulate growth, their effectiveness remains to be seen. Policymakers and businesses need to be prepared for a range of scenarios. Addressing the root causes of the economic slowdown is crucial. This includes resolving trade tensions, reducing policy uncertainty, and mitigating geopolitical risks. These measures require international cooperation and a long-term perspective. Section 9. Conclusion. Weathering the storm. The global economy is entering a period of slower growth and heightened uncertainty. This is a time when businesses and individuals alike must brace themselves for potential challenges. The financial markets are showing signs of distress, with stock prices fluctuating wildly and investor confidence waning. Dark clouds loom over the financial district, symbolizing the storm that is brewing in the global economy. Traders on the floor are visibly anxious, their faces reflecting the uncertainty of the times. Understanding the drivers of this slowdown is essential for making informed decisions. Analysts and economists are working tirelessly to decode the complex data and provide insights. They are examining various economic indicators from employment rates to consumer spending patterns to understand the underlying causes of this economic turbulence. In boardrooms, presentations are being made, and strategies are being discussed to mitigate the impact of the slowdown. Close-up shots of economic reports and graphs highlight the meticulous work being done to navigate these challenging times. While challenges lie ahead, proactive measures and adaptability can help us navigate the turbulent waters. Business teams are coming together, brainstorming and strategizing on how to weather the storm. Just like a ship sailing through rough waters, they are determined to stay afloat and reach calmer seas. Collaboration and teamwork are crucial, as depicted by hands working together to solve a puzzle. Each piece represents a different aspect of the strategy, and only by working together can they complete the picture. By addressing the underlying issues and implementing sound policies, we can strive for a more stable and prosperous future. Government officials are in discussions, formulating policies that can provide relief and stimulate growth. Diverse groups of professionals are engaged in strategy sessions, bringing their unique perspectives to the table. Meanwhile, construction workers laying a strong foundation symbolize the efforts being made to build a resilient economy. These collective efforts are aimed at creating a stable environment where businesses can thrive and individuals can prosper. The path forward requires careful navigation, but with collective effort, we can weather the storm and emerge stronger. As the storm passes, the ship navigates through calm waters, symbolizing hope and recovery. Diverse hands coming together in unity represent the collective effort needed to overcome these challenges. The sunrise over a calm sea with a ship in the distance signifies a new beginning and the promise of a brighter future. Together, we can navigate through these turbulent times and emerge stronger, more resilient, and ready to face whatever comes next.